current liabilities. कुछ नहीं समझ में आ रहा है तो others में डाल देंगे. That should not be the approach, because a specific tag of interest accrued but not due unsecured loan is already been provided there. Similarly, there are many more to come, so I'm not going into detail because we are running short of time. So I'm just skipping these slides, few of these slides, and let's go to the and even in case of text block tagging, what people are doing is we are tagging it, we are tagging a 0 in the text block tagging and providing the detail in the footnotes, okay, which is completely wrong. And if the department wants to pull the data, they won't be able to do it. And obviously in times to come, I think there will be notices for against those companies who are following these approaches. Now we need to have the correct amount unit, date, and other attributes are to be selected correctly. There are companies who are given their annual reports in, say, thousands, and while converting the data in XBRL, they are using lakhs. They have converted in lakhs or in crores. So if we try to compare the two documents, the stakeholders won't be able to reach to a meaningful conclusion. So we have to see to it that both are in align. So check the business rule application, check the mandatory tagging requirement, and check the format errors. So for validating or for giving the instance document, MCA has provided this validation tool. This is the screen which will appear before you, and go to the validation tool, click on this open button. Can we have this slide, please? Thank you. This is the screenshot of the validation tool provided by MCA. Once you pass your instance document from this, so if there are few errors, so it will be giving you all sort of errors that okay, element reserve, surplus, specified value this, expected value this. If there are calculations inconsistency available in the instance document, it will give you this type of errors. And then if there are few related parties for which you have not provided the relevant data, it will be providing you all sort of errors. Apart from that, once you are through with the basic validation, you need to do the pre-scrutiny. What is the pre-scrutiny? What happens is when the validation is complete, you pass on the instance document through the tool to the MCA portal, which will do some validations online with the MCA database and with the database of ICAI. What are the basics which they are checking is pre-scrutiny error of SIN, whether the SIN provided for the subsidiary and other companies is correct. If the name and SIN number is not matching, it will give you an error. And if the PAN number is not matching with the database of MCA, then still they will be giving an error. And if the membership number and the name is not matching, it will going to give you an error then. And similarly, in case of DIN also, if the error is there, it will be giving you a error alert. These are the different type of errors which will be coming your way. And the reason why I'm telling you all these things is that kindly try and validate all these SIN, PAN numbers, DIN, and auditor name and membership number beforehand. So because in the last hours, sometime it so happens that okay, the member has not paid his fees, or because of any reason that he has paid the fees but ICAI has not updated the database, because of any reason, because of any mistake on anybody's part, last moment your file can get stuck up. So apart from that, these are a few of the documents which are to be attached with the document which you are going to upload, that is corporate governance report, then management discussion analysis, and any report, detailed report about the employees under section 217, and then auditor certificate to corporate governance, and then compliance statement by the company secretaries and statement. All these things you are aware, these are to be attached with your 23 AC and ACA. And then there is a guidance note, kindly go through it. the format of certificate availability. Now there are few business rules. I will take just 2 minutes to discuss these business rules. There are new business rules just given by MCA 2 days ago only. If there is a parent, there got to be one child. Say for example, if we are providing, that is okay, this is the total for building. So building is there, and in the taxonomy there is a hierarchy that okay, building, factory building, residential building or office building. If there are childs available, you have to provide the details. There are few exceptions and exemptions given by MCA that okay, in case of fixed assets we won't be checking this, but otherwise in all other notes or wherever there is parent-child relationship, you can't say that okay, I am having sundry debtors 10 crores. But if in the taxonomy they are provided, okay, you have to provide that okay, whether these are secured, unsecured, long-term, short-term, more than 6 months, less than 6 months, if these tags are provided, so there is a relation of parent-child. So you need to have all those things available in the annual reports, and we have to see to it that okay, if our annual reports are not having those informations in the annual report at the moment, and these are the additional informations required by MCA, we need to have those all those information beforehand. Apart from that, if there are any linkages between balance sheet and its schedules, they have to be completed. You don't have to load any of the images, charts, graphs in the instance document. Only text block tagging can be done. No images, chart, graphs can be uploaded. And if you have provided any monetary value for the current year, you have to provide the value for the previous year as well. Only exception is if it is the first year of operations. That is the first balance sheet. Then only this is exempted. Otherwise, if you are providing any of the monetary value, you have to provide the value in previous year also. If there is no value, you can provide 0, but that tag has to go. Now, if we are having a opening and a closing balance, say any closing balance of previous year will be opening balance of the current year. So these two figures should match, and there got to be a single tag for both of these. Now here, this is very, very important, that element having data type monetary, the value up to maximum 2 decimal places shall be allowed. We have seen practically in many of the balance sheet and the instance documents wherein we have used more than 2 decimal places, and if you download that document from MCA portal, it won't be very readable to you. It won't be making any sense for anybody. So kindly use last 2 points. Reporting currency need to be INR only. Only in case of subsidiaries it can be other than INR, otherwise it should be INR only. All the date should be greater than or equal to the date of incorporation other than the date of birth of directors or start date or end date of the subsidiary companies and the associate companies. So with that, I come to the end of the presentation, and
thank you, Vijay. It's actually very interesting to see the technical aspect from a technical person like you.
Thank you, sir.
We as an accountant normally dealt with what impacts the client and what impacts us, and what is the various areas where we have to concentrate so that our attest function has been done according to the regulations prescribed by the Institute of Chartered Accountants of India and within the framework done by the regulators.
Correct, sir.
So
actually,
the points which you have actually built in,
right, sir.
So the various areas where everything goes to miscellaneous or the residual category is not the correct way, and it defeats the very purpose for which the XBRL has been introduced.
Right.
So the analytical purpose for which we are actually looking for is actually totally missing. So
right.
Thank you very much for
theoretically we are saying that okay, after the implementation XBRL this will happen and that will happen, but if it is just garbage in, garbage out. If we are not giving proper tags to the line items, we won't be able to get the exact result for which we are eyeing.
You're perfectly correct, because the analysis of data is what we are looking for. When everything goes into miscellaneous bucket rather than going to the correct tag, it actually defeats the purpose for which it is actually planned by the regulators. Okay. So thank you very much for throwing so much of light on that. And the way in which you have explained, we believe that we should have a very exclusive time for taking the technical aspect of the XBRL, so that you will be able to throw more and more light. Thank you very much for coming and being with us and providing the support on the technical side. And on behalf of the CPE committee and on my own behalf and on behalf of the chairman of CPE committee, Devaraj Reddy, I thank you very much for the excellent demonstration of your knowledge base. Friends, since we said that we are planning to do a small level of discussion on revised schedule 6, because the idea behind organizing this was mainly to discuss on XBRL and not to deviate from that. Fair value measurement also, we have thought that we will only discuss what is the recent development. So more time was actually planned for XBRL, and we are fortunate that we are also having a technical person who has done a lot of work on that to discuss on that. And at the same time, when we have changed the topic and we wanted to give you something on the revised schedule 6, let me just tell you what we are actually planning. And with the time available, maybe around 10 minutes from now, I will only throw you light on the practical issues which has been deciphered by means of the frequently asked questions which has been issued by the Institute of Chartered Accountants of India with respect to the revised schedule 6 in certain areas where it was like whether we have to do this way or that way, or whether this item has to be taken as a current asset or a non-current asset. All those things, some clarity has been provided by the Institute with the frequently asked question. I will just take you through some of the items within the available time of 10 minutes. The first and foremost point which I wanted to tell you on the practical side is to see the frequently asked question in various answers they have given. One particular point they have noted very, very seriously, or they have given a very big clarity, is what is the way in which you analyze an asset should not be the same rule to be analyzed for a liability. I will tell you this. For example, the rule for ascertaining whether an item will be a current asset says that whether it is expected to be realized within 12 months from the end of the reporting period. So the words used in assessing an asset is expected to be realized within 12 months, expected to be realized. If you see the corresponding rule for determining whether it is a current liability or a non-current liability, the words used is basically whether due to be settled within 12 months from the end of the reporting period. What we have used in asset is whether expected to be realized, whereas here whether due to be settled. So if they have used the word expected to be settled, whatever rule we have applied for the purpose of ascertaining whether an item is a current asset or non-current asset, we can straight away use the same parameter for the purpose of determining whether a liability is a current liability or a non-current liability. But the words which has been used is whether due to be settled. Let me give an example. For example, a company, a parent company has given a loan to its subsidiary company, and the loan is repayable on demand. So how this particular item will be presented in the standalone financials of the subsidiary, standalone financials of the parent. Let us just discuss that. Then you will understand what is the difference between the words used in the rules. The first point is, in the standalone financial of the subsidiary company, this is a loan taken which is a liability, and accordingly the rule says whether it is due to be settled within the next 12 months. When a loan has been designated as repayable on demand, automatically it has to be treated as a current liability. So the subsidiary company, because of that, it's due to be settled within the next 12 months, irrespective of whether it has been renewed year after year. The subsidiary is not having an unconditional right to defer settlement beyond 12 months, so it has to be treated as a current liability in the standalone financials of the subsidiary company. Now, since the subsidiary company has treated this as a current liability, whether the parent company can treat that as a current asset, because when a parent company has given a loan to its subsidiary, it's an asset in the standalone financials of the parent company. Whether the parent can treat this as a current asset, the answer cannot be yes, or maybe I can say that it may not be yes. Why I am saying that is, if you see the rule, expected to be realized is what we are supposed to test rather than whether it is due to be realized. So due to be realized means I will apply the same principle of what the subsidiary has done, whereas here it is not due to be settled, but it is expected to be realized. And accordingly, if the parent company is supporting the subsidiary company by providing this loan, irrespective of whether it's repayable on demand, and never planning to demand it in the next 12 months, it will continue to be a non-current asset in the financial statement of the parent company. So the clarity which has been brought in the FAQ, many of the questions have been answered in this direction. Please check a liability with the rules relating to liability. Please check with respect to the current and non-current classification of asset with respect to the rules given for an asset. Don't have a confusion between whether I can use the terminology for with respect to a liability with asset and asset with the liability. That's the first and foremost thing which has been brought in.
If I twist the question a bit,
yeah.
Say if it is not a subsidiary company of us,
yeah.
So will the treatment differ?
Okay, so Vijay, it's a very good question. Suppose if it is not a loan given to a subsidiary company, whether the answer will remain the same. Let me just again come back to it's because it's throwing exactly, you are nailing on the head of the, it's actually you are bringing the exact point what we are actually trying to bring out by means of the FAQ. The point is, whether it is a subsidiary or to any other party where I am giving the loan, the point which I am seeing is what is the management expectation of realizing this particular asset, whether it will realize within the next 12 months is what we are looking for. If the expectation of the management is not to call for that in the next 12 months, whether it is a subsidiary or any other person, it will become a non-current asset.
So, as an auditor, I have to go by the terms and condition of the agreement of the loan or the perception of the management. How?
Yeah. So again, you are asking the fundamental question, whether I have to do I have to worry about the form or I have to worry about the substance. See, as an auditor, all the regulators, including the auditing procedures, are looking for substance over form. When we are talking about substance over form, what we are actually looking for is, maybe the legal agreement says that it's repayable on demand, and my intention is demonstrated that I am not going to call for that loan.
Okay.
So in that case, the substance of the transaction makes this as a non-current asset.
Okay.
So that is the rule which has been prevailing with respect of the many of the items which has been given in this financial statement. See, another important point which has been brought in is with respect to the share application money. The share application money is one of the point of worry with respect to the closely held companies, maybe private limited companies, where authorized capital may be, say, for example, 10 lakhs, but the share application money may be 30 lakhs. So in that case, very, very clear, it was very clearly spelled out by the FAQ that if the authorized capital is lower than the share application money, it was very clearly said that it is not pending allotment. It is not a share application money pending allotment, and accordingly it will not find a place on the face of the financial statement. It has to be treated as a current liability, and it may impact the quasi-equity concept which has been used for financial purposes. So that is another important point which has been brought in. More clarity has been brought in with respect to the tax presentation. What we do is advance tax net of provision, or provision net of advance tax. How we will classify? So the FAQ has made one point very clear. It said that as long as the provision is higher than the advance tax paid, that means you have already provided for a liability which is due. So accordingly, the provision in excess of the advance tax should always be treated as a current liability. Vice versa, if you are talking advance tax paid in excess of the provision for tax, that means you have paid advance tax or TDS or self-assessment tax in excess of your liability, and you have to get it refunded only by means of an assessment which has been completed by the department, which normally takes time. And accordingly, use your professional judgment. In most of the cases, you will end up with having a feeling that it will be a non-current. So this is very important classification, and we will go on including this aspect of the FAQ. But for paucity of time, we are limiting this, and I wanted to encourage my fellow professionals to look into the FAQ issued by the Institute for our benefit, to understand very clearly when we are doing our attest function with respect to the financial statement, which is due to be filed for closely held companies and private limited companies before 30th of September. And this is very important aspect. And that's the reason why I wanted to use this forum to discuss on this particular aspect also. So thank you very much for the patient hearing, and thank you, Vijay, for joining with us. And thank you the CPE committee, the chairman, Mr. Devaraj Reddy, for ensuring that every information is flowing to even the MUFSL chartered accountants at length and breadth of this country. And thank you, Mr. Bansal, for making this support. And thank you, Gyan Darshan channel, for ensuring that, IGNO, for ensuring that this technical support is possible. With this, thank you very much. And we will come back to you with a very detailed session on XBRL alone, or maybe on revised schedule 6, only on the practical aspects, practical issues alone at a later point of time, which has been actually communicated by the chairman, Mr. Devaraj Reddy, for the benefit of the members. Thank you very much.
Thanks a lot. Thank you.